Hey trader, welcome to Trade Tactics, where we turn market moves into profit opportunities. In today's video, we will learn about the MACD indicator. This is a very popular indicator used in the stock market because it can be utilized in many ways. Today, we will discuss what the MACD indicator is, how it works, and how we can use it to trade. The MACD stands for Moving Average Convergence Divergence, MACD. It's a trend-following momentum indicator that shows the relationship between two moving averages. It is a lagging indicator formed by combining two different EMAs, exponential moving averages. In the chart, you will see the MACD appear like this. It consists of four components, which we will explore one by one. The first is the MACD line, indicated in blue, which we also call the fast line. The second is the signal line, known as the slow line, represented in red. The third is the zero line, also called the baseline, and the fourth is the MACD histogram, which moves above and below the baseline, creating bars that move accordingly. On different trading platforms, these colors might appear differently, but the color doesn't matter. You can always change the colors of these components in the settings. What matters is understanding their functions. Before we move on, let's quickly review the calculations of these lines. The MACD line is formed by the difference between the 12-day EMA and the 26-day EMA. The signal line is created from the 9-day EMA of the MACD line. Lastly, the histogram represents the difference between the MACD line and the signal line. How does the MACD work? It contains two lines, the MACD line and the signal line. These lines oscillate above and below the baseline and generate buy and sell signals through crossovers. When the MACD line crosses the signal line from below to above, it's called a bullish crossover, indicating a buy signal. When the MACD line crosses the signal line from above to below, it indicates a bearish crossover, signaling a sell signal. You might encounter two situations in the MACD: positive and negative crossovers. We will understand how to trade in these situations using diagrams. Let's first look at a bullish crossover. You might see a positive crossover occurring above the baseline, where the MACD line crosses the signal line from below to above, indicating a strong buy signal. However, if the bullish crossover happens below the baseline, you should avoid trading until both the MACD line and the signal line move above the baseline. Now, let's examine the bearish crossover. If you see a bearish crossover below the baseline, where the MACD line crosses the signal line from above to below, this indicates a strong bearish signal. If the bearish crossover happens above the baseline, you should wait until the MACD line and the signal line cross below the baseline before taking action. Friends, in the MACD crossover strategy, the baseline holds great importance. Next, we'll understand the MACD double top and double bottom patterns using diagrams to see how we can trade in these situations. When the MACD line forms a double top above the baseline on the chart, it indicates a potential trend reversal, suggesting the market might turn bearish. Similarly, when the MACD forms a double bottom below the baseline, it indicates a potential trend reversal, suggesting the market might turn bullish. So far, we have learned about the MACD crossover and MACD double bottom and double top patterns. Now we'll understand MACD divergences. Before we proceed, I'd like to ask if you have any suggestions for future videos. Please let me know in the comments. My channel is still small, so I have enough time to read all your comments. Let's continue the video. There are two types of MACD divergences: positive and negative. You might notice the price moving downward while the MACD indicator moves upward, indicating a positive divergence in the MACD. In this situation, if a bullish candlestick pattern forms on the chart, it signals a possible bullish trend in the market. In contrast, you might see the price moving up while the MACD is moving down. This indicates a negative divergence in the MACD indicator. If a bearish candlestick pattern forms during this time, it signals a possible bearish trend in the market. Hopefully you found some valuable information in this video. If you found it informative, please subscribe to the channel and like the video. See you in the next video. Until then, best of luck with your trading journey.